The reason silver is going up and the reason gold is going up and the reason they're going to keep going up is not good news. This is a reflection of bad things that are going to happen, not just bad things that have already happened, but metals are forward-looking to bad things that are going to happen. And it's going to be way worse than, how things were during the 2008 financial crisis or during the COVID pandemic. We are on the verge of a massive collapse in the dollar. In fact, the dollar really tanked today, but it's also going to put upward pressure on long-term interest rates, which are also rising. Yields on the 10-year and the 30-year Treasuries are now back above where they were before the Fed cut rates by 75 basis points. But we're going a lot higher.
The relentless surge in gold and silver prices is not a celebration of wealth, but a dire warning of impending economic catastrophe. Markets are currently pricing in a scenario far worse than the 2008 financial crisis or the COVID pandemic, with precious metals acting as forward-looking indicators of a systemic breakdown. The recent price action confirms that the bad news is not just in the past, but accelerating toward a devastating future. PeterSchiff, chief economist and global strategist, warns that the United States is on the verge of a massive collapse in the dollar, which is already tanking against tangible assets. He highlights a critical anomaly. Despite the Federal Reserve cutting rates by 75 basis points, yields on the 10-year and 30-year Treasuries have spiked back above pre-cut levels. This loss of control signals that the bond market is rejecting the Fed's stimulus, forcing long-term interest rates higher, even as the central bank tries to suppress them. Consequently, the rally in metals is driven by the realization that the dollar is dying. As the currency devalues, inflationary pressures push interest rates higher, creating a death spiral for the economy. Schiff argues that this dynamic ensures gold and silver will continue to rise as the only refuge from the coming storm. Now, we present the clips from PeterSchiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The reason silver is going up and the reason gold is going up and the reason they're going to keep going up is not good news. This is a reflection of bad things that are going to happen, not just bad things that have already happened, but metals are forward-looking to bad things that are going to happen. Now, bad things are going to happen to people that own Bitcoin. They're going to lose all their money, but that's not what I'm talking about. I'm talking about much more significant bad things in the U.S. economy that are going to impact average Americans in a very profound way and in a very negative way. And it's going to be way worse than, how things were during the 2008 financial crisis or during the COVID pandemic. I mean, the COVID pandemic, yes, it was a pain in the ass because you couldn't go to restaurants, you couldn't travel. But remember, people had it pretty good during the pandemic. They didn't have to work. They could stay home. A lot of people just stopped paying their rent. They didn't have to make payments on their student loans. They got all this money coming in from the government, and they went on Amazon and they shopped and they bought things. And yeah, I mean, people did go to, parties and they found ways, to entertain themselves, despite all the masking and the stigma of going out. But people generally had a good time during COVID. Kids didn't have to go to school, right? Teachers didn't have to work and go to school, right? But what's about to happen is going to be significantly worse because even if you get a check from the government, it's not going to buy you very much. That is the problem. We are on the verge of a massive collapse in the dollar. In fact, the dollar really tanked today. The dollar index dropped to its lowest level since October, right? Dollar index was down just about a full percentage point. Looks like we closed around 97.4. The U.S. dollar is about 0.5% away from a new all-time record low in the Swiss franc. And I believe we're going to crash through that next week. This is a sign. The world is losing confidence in the U.S. dollar, and they are buying the Swiss franc. Now, obviously, they're buying gold, even more than the Swiss franc. And now they're buying silver. That's also helping to power commodities. Oil was up almost $2 a barrel today. Many of the oil stocks are at new 52-week highs today. They are forward-looking. I've been saying on my regular podcast for months now, Oil is bottoming. In fact, we couldn't go significantly below 60, even on the Venezuela news. And even with all this new Venezuela oil being dumped on the market by Trump, prices held. And we're about to explode. And it's not just oil prices that are going to go way up. It's going to be agricultural commodities. This is a huge commodity bull market. All of this, of course, is going to bleed into consumer prices. But not only is it going to force consumer prices that are already high and moving higher, but they're going to go up even faster. But it's also going to put upward pressure on long-term interest rates, which are also rising. Yields on the 10-year and the 30-year Treasuries are now back above where they were before the Fed cut rates by 75 basis points. But we're going a lot higher because over these last 12 years, and I back then I didn't expect it to take 12 years, and I thought it would have happened sooner. But because it's taken so long, all the problems have got worse. We got way more debt now than we had back then. This is a much bigger bubble. We've printed way more money. And so 5,000 is nothing compared to where we're ultimately headed in the price of gold. But the point is that, these guys were all over me for making a prediction that turned out to be accurate. Yes, it took longer than I expected, but even though it did, if you bought gold back then and waited it out, you're still better off than the S&P 500. But of course, if you bought more, along the way and kept buying, and the same thing is going to happen with Bitcoin. I mean, these guys made fun of me because I missed Bitcoin on the way up. I did. I missed it on the way up, but I'm also missing it on the way down, right? They're going to catch it on the way down. I think the majority of people who made money in Bitcoin are going to end up losing money in Bitcoin because they didn't sell. The ones that got in really early and cashed out, yes, they're going to go home winners. But the vast majority are going to go home losers. In fact, Bitcoin was the best performing investment when hardly anybody owned it. But, the minute Wall Street embraced it, 2021, and, they started launching ETFs and stuff like that, from its November 2021 high, Bitcoin is now down more than 50% priced in gold. More than 50%. So people who sold their gold to buy Bitcoin ETFs have lost a tremendous amount of money. Even though Bitcoin has gone up from then, it's gone up a lot less than gold. But soon it's going to actually be lower than it was back then. Bitcoin was 69,000 at a peak, and now, it's above it. It's, 90,000 or something like that. But it's going a lot lower than 69,000 very soon. In fact, right now it's at 89,400 and 40. So the same people that made fun of me, for my advice against Bitcoin, they're going to have to eat those words as well. Of course, CNBC, they don't even have me on anymore, so they don't have to deal with it. They don't have to apologize. In fact, I was watching today, some people come up and they talk about gold. Although, interestingly enough, the lady that was interviewing this guy who was talking about gold, she kept saying, but you wouldn't say buy it now, right? I mean, wouldn't you tell people to wait for a pullback because it's gone up so much? Like, I never see them say that about the stock market. Like, well, you wouldn't tell people to buy the stock market now, right? It's just gone up so much. Shouldn't they wait for a pullback? No, they never talk about waiting for a pullback when it comes to tech stocks. But no, don't buy gold. You better wait for a pullback. Look, yes, it's better if you could buy a pullback, but what if it doesn't pull back? I mean, if I didn't own any gold or silver right now, I would be buying it today, right? I mean, shame on me for not owning it and letting it go up this high without buying it. But, you can't just keep waiting for a pullback that may never come. Or if it comes, you won't be quick enough to snap it up, or you'll be waiting for a bigger pullback and you'll miss out. Right. So, but the interesting thing is she was so skeptical.
The relentless rise in gold and silver is not a cause for celebration, but a forward-looking warning of an economic disaster far exceeding the severity of the 2008 crisis or the COVID pandemic. While the pandemic era was cushioned by government stimulus that allowed consumption without production, the coming crisis will be defined by a collapse in purchasing power. Government checks will cease to buy anything. Market indicators confirm this structural breakdown. The US dollar index has dropped to multi-month lows, nearing all-time lows against the Swiss franc, signaling a global loss of confidence. Simultaneously, long-term interest rates are revolting against the Federal Reserve. Yields on the 10-year and 30-year Treasuries are rising despite rate cuts, fueling a commodity supercycle in oil and agriculture. Investors are warned about the Bitcoin trap, which is down over 50% in gold terms since 2021, and the media's double standard. While pundits urge gold buyers to wait for a pullback, they never apply the same logic to overvalued tech stocks. In this environment, Waiting for a dip that never comes is a risk equal to not owning the asset at all. Let's get back to the interview.
The monetary order is being changed. We are leaving the US dollar standard exactly as I've been forecasting that we would, right? When Nixon took us off the gold standard, right, the world continued to accept the dollar as the reserve, despite the fact that it was no longer backed by and redeemable in gold, which was the only reason it became the reserve currency. It was because we had so much gold that Bretton Woods agreement, we were able to have the dollar as the reserve currency. But we went off the gold standard, but the world continued to accept the dollar as if it were still backed by gold. Well, the significance of what's happening now is that the world is now going off the dollar standard. They should have done it back in 1971, but they didn't. And that's what enabled over 50 years of this, service sector bubble economy to be created, where we will able to live beyond our means, consuming what we don't produce, borrowing what we don't save, thanks to the reserve status of a fiat currency that we created out of thin air. And Trump just went around the world telling everybody how they're nothing and we're everything and we're the greatest country and we're the strongest country and we have this huge military. And, I was thinking about invading Greenland and taking it over. But, I'm a nice guy, so I won't do it. But I could do it if I wanted to, and I may do it. You never know, right? And the only reason that we're in a position to do this is because the world pays for it. See, Donald Trump thinks America pays for everything. He keeps talking about how the rest of the world doesn't pay its fair share, and we're covering all the costs. Well, where do they think America is getting its money? It's borrowing it from the very nations that he accuses of not paying their fair share. We're borrowing a fortune from Europe. We're borrowing a fortune from South America. We're buying it from Asia. We've borrowed a lot of money from Japan. They're about to be cashing that in. The Japanese, I think, are about to be selling a lot of U.S. Treasuries to pay down their own debt because their debt is getting a lot more expensive now with yields surging in Japan. So this is a very significant event that is taking place. Very few people seem to appreciate the gravity of what's going on. I mean, yes, you're seeing it now in the gold and silver market, but most people don't get what it means, right? But they're buying now, and they're starting to buy, and money is starting to move in to gold and silver mining stocks. This is just the beginning, right? Because most investors have zero exposure, right? Now, in a few years, I think just about every institutional investor, all the pension funds, all the endowments, all the mutual funds, they're all going to have allocations to precious metals, whether it's some physical precious metals, mining stocks, everyone's going to have it. Because if you don't have it, you're going to underperform, right? Nobody wants to go out on a limb like I do and be the first one to buy these stocks, right? Because if they don't work out, right, they look like a fool and they get fired, right? But what happens is once these stocks start performing, then if you don't buy them, you look like a fool and you get fired. So there's going to be all sorts of pressure on money managers to start allocating towards gold and silver, towards mining stocks, and get into foreign stocks and get out of the dollar. But what's going to happen, and this is an important point that you got to grasp, because we're headed for a crisis worse than 2008 for America, right? The 2008 crisis is called the global financial crisis, right? This crisis that's coming is not going to be global. It's going to be American. Now, the '08 financial crisis was made in America, right? But the problem was we had exported all of our bad mortgages all around the world. So when the mortgages went bad, foreign creditors that owned those mortgages also had losses. But what created more problem for the global economy was that when the financial crisis hit, the dollar was at an all-time record low and it had a big rise. And that rising dollar, right, was a big problem for the rest of the world. This is going to be the opposite of that. This crisis is a dollar crisis, and it's hitting when the dollar is relatively high and has a long way to drop. Now, it's already dropped against the Swiss franc, but if you look at a lot of other currencies, the dollar is still high compared to where it was in 2008. And as the dollar falls, that's going to be a big positive for the rest of the world.
The global monetary order is fracturing, signaling the definitive end of the U.S. dollar standard established after the 1971 closure of the gold window. For 5 decades, the world accepted unbacked fiat, allowing America to fund a consumption-based bubble by borrowing from nations it now antagonizes. That privilege is vanishing. With major creditors like Japan facing their own debt spirals and selling treasuries, the financing for U.S. deficits is drying up. This shift will trigger a stampede of institutional capital into gold and silver. Currently, pension funds and endowments have virtually zero exposure, but as mining stocks soar, the career risk for money managers will shift from buying them to missing out on them. PeterSchiff warns that, unlike 2008, which was a global contagion, this will be a specifically American crisis. As the dollar collapses from its highs, it will liberate the global economy, benefiting foreign producers while devastating American purchasing power. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.